Dear friends, we, Swetark Consultancy Services, SCS. SCS is an Indian international organization, which provides one-stop solutions for all size of businesses. Single candlestick patterns. Let us start with single candlestick patterns, which is useful in future to understand double and triple candlestick patterns in next videos. Spinning tops candlestick pattern. A spinning top is formed when a candlestick has a long shadow both side above and below and a narrow body. So the market had an extensive trading range, but little difference between its open and close price. Unlike most candle patterns, it doesn't really matter if a spinning top is formed on a red or green stick. There just needs to be a small body and a long shadow. In a spinning top, there's a tug of war between buyers and sellers. But the bears and bulls are cancelling each other out, so there's little in the way of actual movement. Technical traders take spinning tops as an indication of weakness in an ongoing trend. If a market forms a spinning top after a lengthy bull run, then positive sentiment may be running out, and if a market forms a spinning top after a downtrend, then bullish opinion may be gaining strength. Maruba Zoo candlestick pattern. Maruba Zoo comes from the Japanese word for bald. It means a candlestick that has no shadow whatsoever. A green Maruba Zoo opened and closed at its highest levels, and a red Maruba Zoo opened and closed at its lowest levels. As you can see, there'd be no price action above or below the open and close prices. This makes a solid green stick an indication of clear bullish sentiment. Red Maruba Zoo is the exact opposite of green. It tells you that bears were in almost total control and bearish sentiment will continue. Doji candlestick pattern. In a doji pattern, the open and close prices are exactly equal or almost equal. So the body appears as a very thin line, normally less than 5% of the total range of the period. Like spinning tops, this can tell you that the bulls and bears have cancelled each other out by the end of the session. There are mainly 4 types of doji patterns. First, long leg doji have a lengthy shadow both above and below the body. Second, gravestone doji have a high shadow above the body and nothing underneath. Third, dragonfly doji have a long shadow beneath the body and little to no shadow above it. And 4, price doji have no shadow at all, but it has theoretical existence. Normally it is not available in active chart. Doji are often taken as a sign of reversal. If a market forms are after an extensive uptrend, then it may be about to head back down. After a bear move, selling sentiment could be exhausted, meaning bulls are about to take over. Hammer candlestick pattern. If a market forms a hammer after an extended move down, then technical traders believe that it might be a sign of bullish fight back. You can spot a hammer by its long shadow below a comparatively short body, with little to no shadow above. The body should be 2 to 3 times shorter than the lower shadow. This shows that the market hit a new low during the session, but bounced back and closed much higher. So while there was significant selling pressure, buyers stepped in to push back the bears before close. Inverted hammer candlestick pattern. Inverted hammers look exactly the same as hammers, just upside down. So there's a comparatively short body underneath a high upper shadow, with little range below. They also appear after downtrends and are taken as a possible signal that a reversal may start. However, the price action within an inverted hammer is a little different than hammer. The upper shadow shows that buyers took control of the market within the session, but were met with resistance from the sellers. However, sellers were unable to push its price further down, meaning that bearish sentiment may be at an end. Hanging man candlestick pattern. A hanging man looks same as a hammer, the only difference being where it crops up. While a hammer appears after a downtrend, a hanging man will do so after a bull market. It is taken as a sign that selling sentiment is growing against buyers, and therefore a reversal may be coming soon. The price action within a hanging man might look like this. A red hanging man is usually taken as a stronger signal than a green one, though both are considered bearish patterns. Shooting star candlestick pattern. A shooting star looks like an inverted hammer. But like the hanging man, a shooting star will appear at the crest of an uptrend. In a shooting star, the session starts with the bulls in control, but bears take over, dragging the asset's price back down. It will indicate that the reversal may be coming soon. But like the hammer, inverted hammer and hanging man, it's often a good idea to wait for signs of a new downtrend before trading. In next video we will discuss double candlestick patterns. SCS is giving training on stock markets. It's a great learning as well as earning opportunity for those who wants to become successful in stock markets. Weekly sessions will be held on every weekend. Here we will give you the knowledge relating to the stock markets, from beginner level to advanced level, absolutely free. Which will cost you more than 3 lakhs, if you try to learn from an institute or with some professional traders. Instead of giving tips, SCS is going to make you competent enough to get it on your own. Because learning is the only way to become successful in stock markets. Join us on Telegram for training with us by clicking the given link. To know more about SCS, visit our website, Swetark.com. For getting the regular updates of our learning videos, subscribe our YouTube channel and press bell icon to get quick notification. Thank you so much for your patience and valuable time to view our message.